You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology for credit unions, fintech companies, and we've got a couple of really good interviews for you today. Continuing our coverage from the NACUSO Reimagine conference from a week or two ago, we're going to be speaking with Rhianne Horgan, the founder of Silver, and some really interesting stuff she's got going on. We've spoken to her before, but some new solutions added to their toolkit in terms of dealing with the generational shifts as members move into retirement status, and we are looking to engage the next generation of members as well. We'll also have part two of our conversation, John Best's interview with cybersecurity expert from Scicognito, Emma Zeballos, about the emergence of DeepSeek in the space and some of the concerns that that's caused. I'll remind you that you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. Lots to dig into there around a variety of products, as well as the archives of both our blogs and our podcasts. I was originally thinking that it wasn't that busy of a news week, and I was totally mistaken. It's all relative. The week before was so crazy with the NCUA and whatnot that when I actually stepped back, I would say this would qualify as a very busy news week any other time except for coming out of that one. Probably the single biggest piece of information is a major credit union merger in the works. Ent and Wings credit unions from Colorado and Minnesota, headquartered respectively. It being positioned as a merger of equals, and from a size standpoint, it certainly does look that way. The comment's been made before that as credit unions or financial institutions in general reach the 10 billion mark, it's a pretty big watershed in terms of regulatory oversight and things like that. So it's good to go big in terms of hitting that 10 billion. And really, you don't want to just barely go over it because you take on a whole bunch more regulatory scrutiny, but and the costs that go with that. So if the thought is to not just creep over the line, these two have really set the standard for that one, because Ent and Wings were both sitting between 9.5 and 10 billion. So by combining their forces, they will not only cross the 10 billion threshold, they're going to become pretty darn close to 20 billion overnight. So this one's going to be interesting to watch. Another question is interesting to watch is who's going to approve the transaction. As we talked about last week, the NCUA's 3-member board is now down to 1 member with the 2 firings that took place. Kyle Hauptman is the remaining sole director. So I guess he's got the delegated authority to take care of things like this. So we'll see how that plays out. By the way, Todd Harper, one of the fire directors, has not been going quietly. He's actually been very visible on LinkedIn. We posted a link to one of the things he's put out most recently there, so you can kind of follow along with that saga. The NCUA also, on the very day after the firing of Tanya Otska and Todd Harper, reopened 2 of the finalized rules that were set last year and are both set to go into effect in 2026. One of them actually on January 1st of 2026. So I guess we have to wonder if that will actually happen now. Those 2 rules have to do with succession planning and share insurance. And it's interesting to me, the succession planning one came up, again, this was before the firings, at the NACUSO conference. Dennis Dollar, who is now a consultant in the space and the former NCUA chair, had some serious issues with that one in terms of how it potentially creates continuity. It's ironic that it may create continuity challenges by being too open book about succession planning, which may drive the next generation out of the credit union if they discover they're not the chosen ones. The share reinsurance one actually looks much more straightforward to me. Basically, the goal is to bring the insurance process more in line with the way that the FDIC approaches it. Here's the irony to it. Both of those rules passed 3-0, which means that Kyle Hauptman voted for them. So we're suddenly turning around in a new administration and going in, presumably if we're opening them, there's a reason for that. And we'll see where those go from there. So that is another one that bears watching. There's a new Federal Register notice for a request for comment. We'll be following that one too. Another piece of news this week, Dick Durbin, everybody's favorite name from the Senate in the financial services space, the author of the Durbin Amendment, has announced he will not be seeking re-election, which qualifies as retirement, I guess, in the Senate. He's about to turn 80 years old. The question that comes to my mind there is what that means for the Credit Card Competition Act. He's been one of the big proponent of pushing back on card fee interchange, things along those lines. So without him as a champion, does this kind of go away? The other way of looking at it might be, is this something that's going to be an opportunity for him to get a parting gift from his longtime colleagues? Because there is other support. It was a bipartisan one. Roger Marshall from Kansas on the Republican side on that one. Again, that brings the whole notion back to the kind of the front of the table, if it wasn't already the front of the table, and I think it was. So another one we're going to be watching. Speaking of the Durbin Amendment, kind of goes right along with Dodd-Frank and the disclosures that came out of the Great Recession. Experian had a survey this week that I found a little troubling. Overall, the survey was really talking about positive things about the way consumers are managing debt and trying to get in front of it. But in the process, they made the comment, and this was pointed out by the CU Daily, posted this article, that 2 in 5 Americans are still under the impression that just making minimum payments as required on their card debt is going to get them into a good situation. That's troubling, especially when you think about the disclosures that the Dodd-Frank rule enforced to put a pretty good sized box right on the front page of every credit card bill, which I have to wonder how many people look at these days, since most of those bills are showing up online and you just see the balance and you can make that payment and you see that minimum balance. So again, we know the debt situation. We know the debt is increasing. We think that financial education is going pretty well, but if you've got 2 in 5 that don't realize that the minimum payment ain't going to cut it in the long term, that's pretty disturbing. Let's get on with our first interview. Rhiannon Horgan, as I say, Silver has been a company that's really been making inroads in the space for some time. They've added a new product or at least new capability in their toolkit around Medicare and people getting engaged and enrolled as they move into retirement age for the Medicare process, which is a pretty daunting task, as I've discovered myself recently, as you will hear right here in my conversation with Rhiannon. I'm here with Rhiannon Horgan, the founder of Silver, who's a familiar face at this point around these parts. We're at the NACUSO conference. I believe we go back to 2021 when
That's
you
correct.
won the Venture Tech. You were also on the stage, and I believe the runner-up on the next big idea competition, and the path continues. I mean, we talked to the winners this year. I saw a common theme here too. When you first launched Silver, you were a consumer direct model.
Yeah.
Then you saw the opportunity of working through credit unions. And I think we've talked about that already, but if you could just remind people what Silver does and how you kind of moved into that credit union space.
Yeah, so Silver is focused on helping credit unions educate and engage members over the age of 50, specifically helping them navigate retirement. So figuring out Social Security, Medicare, taxes. For those of us that remember 2021 NACUSO and Venture Tech, at the time we were a direct-to-consumer platform and we're really focused on education. It's been a couple of years we've been building with a lot of partners, and today the platform has that kind of core that we really love, which is the education for members, but we also have a data platform where members are sharing lots of information about who they are, their goals, their dreams for retirement, but importantly, really helping us identify some key money movement indicators when they're retiring, when they're electing Social Security, are the real key life indicators that determine when money is moving. So when you're going to roll over an IRA, a 403B, and we want to make sure the credit union is positioned to capture that money.
Interesting you mentioned 403B as
Yes.
opposed to 401k,
Yes.
because again, credit unions, teachers.
Absolutely, and you'd even put in, some of the TSPs when you think about some federal employees that are members. And then the latest leg of our platform is our Medicare platform.
And that's the piece I really want to jump
Yeah.
into, because that's what really caught my attention when you talked about this. You are live now with MSU FCU, which I guess is one of the reasons you are a CUSO now, correct?
That's correct. So, if I go back to that kind of early days at Venture Tech and at NACUSO, we were direct to consumer. I think that was an amazing opportunity for us to really listen and learn, to understand what the American public needed as they navigated retirement. And I think we learned a lot of things that when you think about the design of how we've built Silver to be this really personalized experience, to be designed for a demographic over the age of 50. The one code we could not crack and direct-to-consumer was the ultimate trust for money management. So folks really trusted us enough to be educated with us, but they did not want to make the final big decision with us, whether it was to buy Medicare, whether it was to roll over that 403B, the 401k. And when we came to Nacuso and Aventurtech, what we realized was, well, this is where the trust is. The trust is with financial institutions, and in particular, it's with credit unions. So we pivoted. We became a CUSO, so our holding company, so the entire company now is a CUSO. Michigan State, Idaho Central, Mission Federal, and Circle were the early investors in the CUSO. And those partners and some of our early credit union partners really helped us figure out, like, how do we not only solve the members' problem, but also how do we help credit unions do things like earn non-interest income. And I think the Medicare platform has been both of the solving the member problem as well as generate non-interest income for the credit union. I think for members, from the earliest days, I remember folks talking about healthcare in financial terms. And that might be obvious when you're thinking about younger members who might have, huge medical bills that, drive bankruptcies. But, you were just telling me, Glenn, that your wife has been enrolling in Medicare.
and it really struck me. You made the statistic you gave. People have this sometimes a misperception that Medicare is free. Yeah. No, it guarantees you can get insurance, yes. But you had a statistic on the average over the life cycle of someone during their retirement years, how much they pay to Medicare.
They pay on average $300,000. That's
amazing.
As a couple. But you and I were talking about like the premiums your wife is paying, and I think we kind of got to the point that it was $500 to $600 a month.
I remember it being. I think it starts with a 6. Yeah.
Yes. So it's a big amount, and so you multiply that by 2 people by 25 years, and you very quickly get to $300,000.
And of course, there's a lot of options. You got the Medicare Advantage, you got the traditional plan, you got the overrides with prescriptions. It's just as complicated as everything else.
Yeah, well, it's the options actually that creates the opportunity for the credit union, which is for many folks, they've been fortunate enough to be in employer healthcare for a long period of time where their employer picks a carrier. They typically have 1 or 2 options. So there's not a lot of complexity to the choice.
And they help subsidize it.
And they help subsidize it. Exactly. But when you get to Medicare, you could have 60, 70, 80 policies that you're eligible for in your particular zip code. And by the way, it is based on your zip code. So like you and I would have access to different policies because we live in different cities.
It would look a little bit like the exchanges for the Affordable Care Act.
Very much like that. I think the challenge to think about, though, is that unlike Affordable Care Act, Medicare is health underwritten after the age of 65. So at the age of 65, you have the ability to enroll in any policy you want. But after the age of 65, if you look to change a policy in the fall, so every year you can change your policy. If you look at changing a Medicare supplement plan, those carriers are allowed to medically underwrite you. So one of the challenges when you turn 65 is you kind of want to get it right. Mm-hmm. Because if you think you might want a med sup plan in the future, you really have to buy it when you're 65. The switching
cost gets a little tricky.
So I think what happens is that folks start to be very uncomfortable making this decision on their own. They want to talk to a human, whether it usually often starts with a family member, that brother or sister that's a couple of years older, that colleague that's a couple of years older.
We had that Sherpa. Yeah, we had that exact same thing. Somebody who'd been through it, and they referred us to someone who played the consultant role.
Exactly. And so when you think about the Medicare agent, their job is to really help you figure out what policy makes sense. I would say an agent is a free benefit for anyone to use because Medicare commissions are actually regulated at the federal level. So whether you buy an Aetna policy from me or the broker down the street, your premiums will be exactly the same.
And they truly don't have an incentive to steer you in one direction.
Well, that's an overstatement. In theory, no. I would say that there is probably a skew towards the Medicare Advantage plans today because the Medicare Advantage plans tend to have lower premiums, and so they're, in theory, a little bit easier to sell.
Yeah.
I think when folks start having to pay a premium, it is like people think a little bit more. They're going to probably spend more time in a meeting.
Yep.
But it might be exactly the right thing. So I would say you do need to make sure that, like, if you're of that age or if your family member is really making sure that the agent has access to lots of carriers, so they're not just selling one plan, because it could be they're comfortable with one plan and they're not telling you your other options, that you've really thought through, like, is Medicare Supplement or Medicare Advantage like more appropriate for you? And that's where, I would say that those conversations happen with a human, and folks like to have it in person. And so when we thought about, okay, well, we're doing this digital education, we're almost doing like the upper funnel education where you might have gone onto Google to like understand Medicare Supplement, Medicare Advantage, do some of your primary research. What we think about is the Silver Education platform delivering that. But once a member gets ready to start really thinking about like what plan do they want to enroll in, that we are now bringing agents to the credit union, so the agents can sit in the credit union branch. They can help the member through those decisions.
You provide the agent to the credit union.
Yeah, so our CUSO has set up an entity called Silver Insurance. It is part, again, of the CUSO. The goal here is to really deliver, I would call it Medicare in a box, make it really easy for a credit union to spin up Medicare at the credit union. What we saw when we went live with Michigan State was that if given the option, members really loved the opportunity to meet in the branch. It's where they feel comfortable. They trust the branch staff. They feel like they're in an environment where they're being taken care of. And so what we are doing is because of that in-person model, we're rolling it out state by state. So we're live in Michigan. We're adding Washington State, Oregon, California this year, and likely.
And these are kind of following with the other credit unions.
Credit unions in those states. So in Washington State, credit unions like GISA, Sound, Washington State Employees, MAPS, Rogue, OCCU in Oregon, and Mission Federal in California. So, these are credit unions who, I think really understand that health is wealth. These are big decisions that members have to make. And, I always think about these members as needing a different set of products now in this phase of life. So they went from maybe being your biggest borrowers to now becoming your biggest depositors. And now they've got the healthcare decisions to make. They've got to think about where are they going to roll over their IRA, their 403B, where are they going to direct deposit their Social Security.
And you've got it. Basically, this is not only a one-stop shop, but also important trusted assistance on a very complex and important decision.
Yeah, you can't underestimate how important trust is here. And this is where, Glenn, I really, I don't think this is a generational thing where, like, when so I'm late 40s. I believe that I will still want to talk to a human when I enroll in Medicare,
Mm-hmm.
And it's not because I'm not tech savvy. It's because the consequences of getting it wrong are so high. And so I think this is like a classic, like, credit unions play to your strength. You're strong on trust. You're strong on physical presence. Bring those members in, really serve them. And there's certainly aspects of it that can be improved with technology. So you can think about, like, I imagine your wife used what's called like a prescription drug finder, where
Yes.
she might have put her prescription drugs in, and it would help her like funnel down, what carriers or plans made sense for her.
But she had the human. It was all by phone, but she had the human interaction. Somebody that was referred to us that had a positive experience, and that same person probably was sitting in front of the computer using exactly what you said.
And look, and I think I think what's interesting about your story is you talk about the family members. Like, I really think about retirement being this like social journey, which is where we all go through retirement with people that we've known for a long time. It's colleagues, it's family and friends who are a couple of years older than us or a couple of years younger than us, and so we're all in this like life phase together. Same thing with referrals, folks. When they find a good Medicare agent, or like they find the one person at the Social Security office who's competent and friendly and helpful, like, you tell your friends, right? And so, while it might be socially unacceptable to tell your friends how much you've saved in your 401k, the swapping tips about Medicare, about Social Security, and hopefully swapping tips about that amazing Medicare agent at the credit union, like, that's where you really start to see, I think, some really interesting, frankly, new member acquisition, new deposit acquisition opportunities for the credit union, as well as just deepening the relationship that you have with members.
And the thing I'm thinking about here, if I'm remembering correctly, a pain point that really brought you to start with Silver, weren't you helping your father get set up? And you were saying, I believe you're an attorney, if I'm not mistaken. And it took you an awfully long time to kind of cut through all this nonsense.
Well, it's interesting that my dad is a retired doctor. And so, like, we went through the whole Social Security journey with my mom, and then we went to try to figure out Medicare for my dad, because my dad is 5 years older than my mom. So when he enrolled in Medicare, my mom lost her employer coverage, and so she went to the exchange. Mm-hmm. So they navigated like Medicare, ACA, and COBRA at the same time, like, awful, right? But that's actually a very common experience because most people don't go at Medicare at the same time. And I was like fascinated because here was my dad, who was a doctor.
Yeah.
You'd think he'd be like
in the field.
And he made so many mistakes in that journey. Like, he has switched his carrier multiple times. Which is just fascinating that even someone who worked in the field didn't quite get it right.
Well, and the other thing I'm thinking, we talked a little bit at this conference as well about the Great Wealth Transfer. Mm-hmm. So the fact that you got involved, it's extending that degree of trust. It's not just new member acquisition of the peers of these people, but it's getting that trust going with the next generation. So when you do have that wealth transfer, you're in the locus of consideration. Is that a fair statement?
Absolutely. Although I'm going to challenge you on wealth transfer, because I think a lot of folks say wealth transfer and they think about member dying. What I would say is actually the first wealth transfer happens when folks retire. and they transfer money from their employers, which
Good
is
point.
their
Good
401ks,
point.
their 403bs.
It's a wealth transfer within the generation, not
it's
across
staying in the same
generations.
generation, but it's moving the money is moving from employer plans into credit unions,
That's
et
a fair
cetera.
point. It's a fair point. Although that one, if you have the trust already, you'd like to think you've got the leg up. It's the
I
trickier
mean, you hope
one.
so, but the data wouldn't show it. You know,
Really?
the average credit union has less than 3% of their members' balances. When
Wow.
we see the balances their members are reporting, it's like the industry is not capturing it. The second transfer that happens is, I'm sorry to say this to you, but your wife may outlive you. So us women are
We'll
like,
see
yeah,
about
I
that.
know. So us women, live 4 to 5 years
Yeah.
longer than men, and the average woman 80% of them fire their financial advisor when their spouse dies. So when we think about like who's making decisions, what's interesting, and we saw this a lot with Michigan State, was that the women were making the appointments.
Interesting.
They were dragging their husbands into the
That
appointments,
is
or they were
very-
single and they were coming in on their own. And so when you think about, again, a credit union, the question is, and we actually get asked this when we ask about member count, which is do you have is your relationship with the whole household, or is it with one person?
And I wonder how many people really know that.
It's a big question, and oftentimes it's with one person, but I think something like Medicare allows you, each person has to enroll themselves, but there are like joint financial considerations, and so getting both folks in, getting them both into the credit union, establishing a relationship with maybe the party you don't have a strong relationship, I think is really important.
Yeah, the other thing I was going to mention is I realized I was going to introduce you this way. I'm kind of glad I left it to the end because it's the more frivolous side. Your other role, pickleball impresario.
Oh, yes.
I mean, I don't think you hired an advertising agency, but you couldn't do better than picking a hobby that speaks to the over 50 population, and then it occurs to me also speaks to the need for medical care, because there's an amazing amount of injuries from people who are not in shape that actually, when they're pickleball, if people don't know, Silver's become kind of associated with it as sponsoring a pickleball tournament at the Venture Tech conference every year, and I know you got the pickleballs right there at your booth today.
We have them here. I will tell you, we always every year have a few credit union execs who tell us they can't play because they are worried about the injuries. But the story, when I think about like how we got to pickleball, went back to one of my first user research trips. I spent about a week at the Villages in Florida, which is for those that don't know the Villages,
a gold mine of consumer research.
Oh, it was amazing for user research. So for those that don't know, the Villages is the largest retirement community in America. It's just north of Tampa. And I just within the first day, the kind of pattern matching was that everyone was telling us they were playing pickleball, and I was like, "What is this pickleball thing? I gotta go check it out." And now I live now in New York, and we have pickleball courts in Central Park during the summer. And it's quite funny to watch because you have these, 22-year-old finance bros that are playing pickleball as if it's squash, and they're damaging themselves.
Kind of come into our little tournament.
Yes, and
down
I'm
in
like,
Dallas,
that is not pickleball. Like you don't understand how to play it. So we are gonna go back to the roots this year and make sure people actually play by the rules. And we're gonna send out the rules in advance so that like this is gonna be proper rather than this like squash pickleball or squash badminton pickleball situation that's been going on.
It happens in almost every sport. Rhiannon, it's always a pleasure. People want to find out more. Well, I guess, like you said, you've got a whole bunch of new implementation and live production sites going live at credit unions. Watch this space.
Yeah, absolutely. You can check us out at www.silver.com. And again, it's really easy to get started if you want to start this year with education and then maybe add on data next year and then think about Medicare for the future. We have lots of different ways that we can bundle the solution depending on what makes most sense for the credit union. Wonderful.
Rhiannon Horgan, founder of Silver. Thanks so much.
Thanks, Glenn.
Okay, here's the deal. I'm not sure my wife's going to be all that crazy about the fact that we talked all about her Medicare and kind of basically disclosed her age. So let's just kind of keep that between us. Okay, let's not talk about that one anymore. And we'll great information. Just don't tell my wife. Also, a really good point that I think Rhiannon made around the wealth transfer, and which I always have been along a lot of other people thinking about how that is the transfer of money from the older generation to their heirs, whether or not it's at the point of passing or whether it's a gradual process as they get older. I thought she made a really good point that there's a lot of other transfer that takes place within that generation as people move out of the workplace and start moving their money around, particularly from 401ks and things like that. So Thank you to Rianne for making me kind of reframe my thinking around that one as well. We had an interview a couple weeks ago that got a lot of good attention and was really interesting. And it was a long one with John Best and Emma Zabalos talking about the whole notion of DeepSeek and what it means about generative AI and the cybersecurity risks that come along with that. We actually, we'll go back and we'll post a link to the earlier interview, but there was more to it that we weren't able to actually fit into that first podcast. We want to go back to that one and share a few more thoughts that John and Emma had in that conversation. Let's have a listen.
The dark web is often kind of structured. It's a little bit of a pyramid scheme. So you have these people at the top who are incredibly wealthy, probably still do some hacking and some cybercrime, but they're mostly almost like the dons. Like they have a network underneath them who is doing kind of the next level, and so on and so forth until you get all the way down to these like script kiddies, very unsophisticated threat actors who are basically doing all of the grunt work.
Yeah, because
And
they're taking the risk. Why would you
they're
take the
taking
risk
all
if
the
you're the
risk.
don? Yeah.
Also the work they do is really boring because it's doing these spray and pray attacks where they're just using feeding like long lists of
Yeah.
credentials or anything, and then
Which I think
it's
can all be
boring work.
supplanted by AI eventually. I think all those script kiddies
Probably,
become
yeah.
AI bots. I think all those
And then-
botnets become, yeah.
Yeah. And then eventually, like the lowest rung will be people who have to manage all those bots, which is still not particularly interesting. And the people who are really high up don't want to do. And so what probably happened with this ransomware group is that they have the core members of the ransomware group who often function as sort of a collective where they do profit sharing. They have a pretty sophisticated way of splitting up who did the most work on each thing. But they also have a bunch of essentially subcontractors who are going to go out and get that initial access. And if they get that access, they bring it to the ransomware group and say, here's your entry point. And they'll get a small cut. They're probably working on like commission. So, or they're working on the promise of if you do enough of this, we'll bring you into the ransomware group and then you'll be getting like this passive income from all the other people we get to do this work. So it's an interesting structure. The reason why we kind of latched onto this DeepSeek exposure was because this is, like I said earlier, a new frontier for an old problem. The dark web runs on data. And there has to constantly be an influx of new data that is valuable and that can be fed into these massive machines of just hammering all of the systems that protect our lives, our data, our resources. And there's always kind of this constant search for new and better data that gets passed around through all these different groups. They're also constantly scamming each other. So there's a lot of, well, I basically ruined this database by using it, but I'm going to try and sell it for like $5 for someone, and at least I'll be $5 richer. So there's a lot of layers of these people are working together, but they don't trust each other, and they are also kind of constantly taking advantage of each other as much as they take advantage of just regular people. But we latched on to DeepSeek because this is the first example of what will be a larger problem with the spread of large language models and how deeply they're becoming embedded in society, is that this is a hugely valuable vein of data that people are just giving away. And of course it's interesting to criminals because you're treating this large language model like your diary. You're telling it everything. You're telling it secrets about work. You're telling it about your personal life. You're telling it all of the secrets that were previously being used for things like your multi-factor authentication or your password or whatever. Of course attackers are interested in this.
Yeah,
And this is
I would even go a step further and say you're trying to solve big problems with it, and you may be succeeding, and that information is really important to people to say, okay, well, even just to know what the big problem that person's trying to solve is, depending on their context, right? Like that can give you some ideas.
No, that would be very valuable for that. Again, that more spear phishing approach where you have a target in mind and you're going after it. But
yeah,
I
someone
think
like you said,
also-
and they're trying to figure out, hey,
Yeah.
this firewall or this patching or whatever they ask may denote, or if it's just a nuclear physicist who's decided to use a LLM to try to figure out something. God knows,
Yeah.
I mean, why not, right?
I
To them,
think-
they don't see the issue at the moment.
Right. I think a common fallacy that people have about giving their data away in general is that they think I'm just a regular person, so my data is not important. Like, why should I care if it's accessible? If like this app is selling it to other people, if this app is insecure and they are inadvertently giving it away, or if in the case of data that's being transmitted and stored in China, why should I care if China has access to my information? And I think you should care. I think your data is valuable, and and it is. You don't realize how much value it has to cyber criminals and to, I mean, also to people and to like scammy marketers or like people who are not technically criminals but are also trying to take advantage of you. That's why they want it so badly. So I think it is, people should think of themselves as more important. Their lives are important, their resources and connections to other people are important, and part of realizing that you're important means you have to also think about your data as important. The access it gives people to your life and to your money and to
Oh
your
yeah.
connections to other people
Well,
is
you become a
also
weak link. You become a
meaningful.
weak link in your own chain for everyone else, right?
Absolutely.
Like,
Yeah.
hey, my mom might not have ever seen an email like this because she's not doing this, but because I did, and that exposure, she got got something out of it
Hmm.
because I was talking about her. But what's interesting is your point about how refined or how granular, I guess, this data is that we're talking.
Hmm.
Because you think about like the only thing I was trying to think about where you could get data previous to an LLM that's like this, and the only thing I could come up with are, uh, and they weren't recorded, and there wasn't anything to do with it at the time. But the only thing I come up with is like therapy sessions or something like that, and those generally they didn't used to be transcribed until we have the technology. But search engine
Hmm.
history is the only other thing I can think of, and that's not super granular because there isn't this follow-up question afterwards to keep going and try to figure it out. Whereas search engine data would have been good to know this person's looking for this or this person's looking for that. But now we got the next step. This person's looking for this, and we could see what they found and what they did with it or what their intentions were, right?
I agree. I think we do see that kind of data collected without large language models. Browsing data is can also paint a very complete picture of who you are and what you care about. But generally, outside of either someone purposefully installing those kind of apps for to participate in some kind of research activity, someone doing something on a work terminal that is being monitored with the probably with their knowledge and
Consent,
uh,
right?
approval by the company, or if they have some sort of malware on their device, it's very unlikely that that information is being provided and stolen, right?
Right.
Like, unless most people don't have keyloggers on their personal computers. And if you
Right.
do, that's a big problem, and you should, and like that is anomalous to
Right.
you.
But it wouldn't be the amount of people. I mean, the fastest
Right.
app to 100 million users ever in the history of the world was ChatGPT. So the
Exactly.
scale of this is immense.
It's like it is kind of the equivalent of, imagine if you just had a keylogger on your computer at all times, but the benefit to you was that the keylogger also told you interesting things that you want to know about.
Yes, exactly.
And so people are opting into this, and like I can't say that they're wrong to do so, but I can say that this is a new frontier of your data being available and easily correlated to you. Like, and that's something that people should be thoughtful about. And it's also something where I think you should be you should think critically about which large language models or generative AI that you use. I do think it matters what their policy is. I do think it matters where that data is stored, how it's stored, whether this company has a track record of being careful with data does matter.
It sounds like what I'm hearing you say is the whistle you're trying to blow here is, hey guys, people make these really smart LLMs could just be bait to collect your information.
I think that's a little bit. I don't want to ascribe malice where carelessness does the
I
job,
gotcha.
kind
Okay,
of.
but it could be
I don't.
used for
Yeah,
that.
absolutely. I think there's a danger whenever you collect large amounts of information about a population, because I've seen like the history of data breaches for the last 2 decades has been we amass massive amounts of valuable data. they're inadequately protected, or they're just unlucky and a breach happens anyway. And all of that data eventually filters out to cyber criminals, and it will be continuously circulated. The first cyber criminals who get it will have like the best bite of the apple. They'll get the most value out of it, but then it is going to keep living in this
Yeah,
ecosystem
that $5,
for years
that
and years and
$5, yeah, it's gonna
years.
stay there forever.
Yeah, it will be continually passed around by cyber criminals who are trying to find the next dumbest person they can pass it off to, and so that data is gonna stay out there. And what I want to be careful, what I want to sort of draw attention to, is we are creating the biggest and best data set, like you said, that the world has ever seen. It is incredibly detailed, is incredibly personalized to you, and not only do you as a user need to be careful about what large language models you're using and putting information into, because you can run afoul of these very elementary issues that DeepSeek had when it first released, where these were like basic misconfigurations and vulnerabilities that were just carelessly not patched. But then also you have to think about, we have as a society have to think about, how do we treat companies that amass these treasure troves of data, because how we have been doing it up until now has not worked.
Oh
And
no,
is only
it's a
going to
it.
get worse.
I know. It's funny. I
Yeah.
spent so I'll end it with this. I spent about 3 years really working on decentralized identity, and what I learned from that was, to your point, that data is so important. Like, for example, if you're part of this tribe, and you live in the wrong place, they're trying to find you. They want to get rid of all those dudes, right? So,
Hmm.
and if you've mentioned it or something. So this idea that the blockchain could be sort of a zero trust, but what interests me is, again, you started at the beginning to say, hey, John, this is a new trick on an old problem. And I think you're exactly right, because if you look at sort of the European GDPR, right, the right to be forgotten, but yet
Hmm.
that, now that I'm thinking about it, that should probably play into an LLM. There ought to be a button you
Yeah.
can click that says, forget everything you know about me. And I don't
Hmm.
think we're there yet, or even thinking about this as that kind of Facebook sort of, like, we were worried that Facebook knew too much about us. And it definitely
Right.
does. That's the other place you could get that kind of enriched information. But never have we had Facebook's not having a conversation with you. So yeah, I think you're dead on there. I think that, like, we somebody needs to be banging that drum pretty soon. But I looked into the privacy information for OpenAI on behalf of the credit unions, and what I discovered was, supposedly, according to their privacy policy, they're not going to use anything that you type in there for retraining or anything like that. But I do
Hmm.
know behind the scenes, everything's being reprompted now. Everything. You type in
Right.
something, it reprompts it into something 10 times over. And if you turn on the little discussion thing or hit the little arrow in some of these things, like you can in DeepSeek, you'll see it. But I think that right to be forgotten may need to be something, because I envision a world where the problem is the centralization of data, because it creates the large honeypots, right? Like,
Hmm.
Amazon has all this data about you. And what really should happen is Amazon should have a token, and then my data should be stored in a decentralized, secure, encrypted place that, they can get it. They can only get what they need, because they really don't need to know the rest
Mm.
about me, and here's the rest. And I do see a future for that, but it's funny because it's been being talked about for years, and there are lots, like sovereign.org as an example, but we still haven't seen a widespread implementation. What's it going to take for people to sort of realize? Is there a galvanizing event that you see coming that would cause something like that, to people to finally wake up and see what the scariness is of it? I see you smiling and laughing. People can't
I
see on the
I would
podcast,
love
but
to say yes. I would love to say yes. I really do think that this has to come. I think this has to come from the top down. Unfortunately, I I agree that the data privacy practices, even used by totally legitimate companies who are just trying to sell you stuff, um, they're fundamentally pretty broken, because they built so much of their business on not just selling you stuff, like in Amazon's case, but also taking your data and repackaging it and selling it to advertisers. And until there's a regulation that says that is not a viable business model for you anymore, and you need to stop doing that because it's not fair to the consumer, it will keep happening because there's so much of a financial incentive to do it. And I think it's something that And I think, unfortunately, it's become too normalized for users and for consumers. We're too used to having our data being sold. And I think, and it is so hard to opt out of it in a way that still lets you kind of exist and move in the world. So I really hope that I think we are getting closer to sort of a galvanizing event, but I don't really know what it looks like. But I do think that the state of affairs like just cannot continue. I guess my final kind of thought on this is I think on a consumer level, I guess I just ask everyone, like, be thoughtful about where you put your data and be thoughtful about what is happening to it after you're done with it. And when you're leaving it with these companies, where does it go? How is it being stored? And is it going to come back and be used to attack you? It's something you should think about, like, very actively as much as you can when you're out in the world. For companies and for organizations, also, you need to be thoughtful about how large language models and generative AI are expanding your kind of attack surface, are expanding the scope of interactions and data and devices that you need to care about. We already kind of saw this explosion during the work from home boom during COVID, but like the example that we talked about earlier, where you can extract data off a work device very cleanly using some of these large language models and play around with it and input all this information. Now it's living out there where you don't see it. Organizations need to be thinking about this extended attack surface and extended scope of concern. And there are a lot of interesting ways to do that, but ignoring the problem is not going to make it go away.
So we'll share a link to that earlier interview. You can always find the show notes, by the way, wherever you're listening, whether it's right at the Best Innovation Group website from our media tab. You may be listening on Spotify, Amazon, or Apple Music, etc. In all cases, you should be able to track down the show notes. And we've got a series of links to things we've talked about on the podcast that we think you may want to dig into a little bit further. We'll post the link to the first part of that interview between John and Emma, as well as a link to our first piece of the NACUSA Reimagine coverage from last week, which includes an interview with the Next Big Idea competition winner, a company called Goodbuy. Goodbuy, in case that wasn't clear from the pun may not come through when you're just talking about it this way. I am on my way to yet another conference, by the way, Nacha Payments, going on in New Orleans. By the time you're listening to this, the conference will be about halfway through. But if you happen to be down there, come track me down. There's all kinds of good stuff going on there and a lot of great content. I'll be doing some interviews, including trying to dig into the whole pay by bank scenario, which is getting a lot more attention. So that will be our content for next week. Report out from Nacha Payments. I hope you will join us for that one. Set a reminder wherever you get the podcast to make sure you're aware, but we tend to have the new content out every Tuesday afternoon. As I said, you can always find it and a lot of other stuff about the Best Innovation Group at big-fintech.com. Also encourage you to follow us on LinkedIn and Blue Sky. Best Innovation Group. John Best is at JB FinTech, and I'm with my firm, Glenn Sarvati, at 154 Advisors. One of the things we like to share there, and some of the things we talked about today, is our new feature, the Friday FinTech 5. We put out kind of a curated list of the links to, and without paywalls or anything, the links to the stories that we found out there that we think are the most important. So there's so much going on. We try to boil it down to 5 that we think will keep you very well informed in a real concise fashion. So hopefully that's a service that you might enjoy as well. As I say, more coming up in the near future. Always love to hear from you. Drop us a note via the website, via the link at the end of the podcast. My name is Glenn Sarvati. Again, as always, thank you so much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. Or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.